Welcome back to the program. I'm Zev Brenner, and we now present, as we do every other week, Leumi Financial Corner with Michael Zaremsky, head of U.S. Private Banking, Bank Leumi USA. Michael, good to speak with you again.
Always a pleasure, Zev. Thanks for having me.
So I know you're bullish, and 2020 has started off well. The markets are doing extremely well. You're generally very optimistic. So are we in for a good year?
Zev, I definitely do believe we're in for a good year, and the way that we've gotten off to a start right now, I think most people would be happy to take this as almost a full year's return in January. The NASDAQ is up almost 8%, and we seemingly hit highs every day. But having said that, I think what's important to understand, and I think what we're really focused on here at Leumi, is kind of the bigger macro picture versus some of the micro elements that are happening in the economy. So again, just to add a word of caution, while I still remain very optimistic and about the market and where we're heading, there's certainly room for caution. There could certainly be corrections. There could certainly be some pullbacks. When you get into some of the concept of individual issuer risk, so any particular stock, is certainly not necessarily reflective of the overall market. But generally speaking, I do continue to believe that we will see positive markets and positive economic developments, throughout the course of the rest of the year.
Because it seems like the economy is resilient, whether it's dealing with impeachment, dealing with Iran and disruptions. It seems that, it's still holding its own. What's different this time around than what's been in the past?
Well, it's an excellent question, and I think there's a couple of different elements about that are very important. Typically, when many people are looking at the markets, everybody looks backwards for patterns. And I think one of the challenges is that there's nothing magical about mean reversion, and really it's all about the fundamentals. And fundamentally, I think that we have really gone through a change in how the global economy works. And somewhere along the line, 20 years from now, when we look back, there's going to be a demarcation point where we say this is when we left the industrial age and this is when we started the information age. I don't know where that line will be drawn, but I feel fairly confident in saying we're already in the information age. And you can see this in so many ways as we continue to see technological shifts where we're moving from basically an analog world into a digital world, and so much of this is really being driven by big data. And what I mean by this is that it's no longer about new technologies that are coming and paving the way. So much of what we're seeing right now is proven technologies, existing applications, and how they're being repurposed or reused in new ways to create significant improvements in process and quality and sustainability across multiple industries. And when you talk about the tech story right now, as I said, it's not just about new tech, but it's about how we're using the technology. So try to think about your life and where we're not using software, semiconductors, cybersecurity, cloud applications, and think about how those concepts and those segments of the tech market are now filtering into, fintech, food tech, consumer tech, all sorts of different ways where companies are using these technologies and these applications to enhance and improve the client experience. And, you also mentioned the question about troubles in the world with things like energy. The technology that goes into things like hydraulic fracking or, fracking, which is really creating this massive energy supply, which has now created a situation where the U.S. is actually exporting energy, is so different than any other recent paradigm we've had in history. So you have to really assess the world in a much different manner because of how we've used technological changes to make a better world.
So basically speaking, because of all these technology changes, we're really inured to some of the dynamics which would have affected the market in the past.
Absolutely. And then also when I think about where we're positioned for 2020, again, look back at some of the big overhangs that you mentioned for 2019. And one of the biggest issues in 2019 was trade concerns and import-export issues related to China, related to Canada and Mexico, what would happen with Brexit. And if you want to make an argument that those items were tamping down GDP in 2019, the resolution, or at least, putting those items on hold, certainly a better outlook on every one of those three items today, certainly should be a benefit for GDP in 2020. In fact, according to the World Economic Outlook, recent reports, we're projected to have 2.9% GDP growth in 19. That's supposed to go up to 3.3 in 20 and 3.4 in 21. So we're now looking at a world where a lot of the overhangs have been removed. Growth projections are starting to improve. Global outlook for places like emerging markets and Europe are starting to improve, particularly because of the China trade issues and some of the resolution of Brexit. And now we're also in a world where growth is being significantly enhanced by the ability of technological solutions, technological applications to create better, more efficient consumer experiences and also enhance sustainability. So I think we're really in a macro environment that's really positive for growth. Again, I certainly would not be surprised to see certain individual stocks pull back. I wouldn't be surprised to see a little bit of an intermediate correction where we saw a pullback. But generally speaking, I think we remain on very solid footing because of a lot of the technological changes that are really enhancing the world that we live in. And again, creating growth.
It makes sense, and it's a great news because people are always concerned about economic growth and the status of the markets. And I think from what you're saying, we're off to a very, very good start. And it looks like it will continue for the foreseeable future.
That's kind of what we're projecting right now. And again, I think a big part of it will be earnings growth. And I think one of our focuses going forward will be, what companies are starting to project for 2020. 2019 was a year of stock market returns that were predicated primarily on multiple expansions. So people are talking about valuations being a little bit rich. So now the question is going to be, are companies going to be able to grow into those rich earnings, rich valuations? And again, our bet here is that generally speaking, we believe we're on a pretty good trajectory to generally achieve that.
Michael Zaremsky, head of U.S. Private Banking, Bank Leumi USA, thank you for being here with us. And if people want to get more information, I urge you to email michael.zaremsky@leumiyusa.com. Michael, look forward to speaking with you again.
Thank you very much, Zev.
And you've been listening to Leumi Financial Corner.